daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Brandy.
Bye.
And welcome. Okay, the market again is negative today. But the important thing, though, if you look at the market, since last Friday, our major indices have not been able to claw back their losses. Hi, I'm Phil Brandy at philsgang.com. And that's really important to look at. If you go and take a look at any of the indices, especially the most important ones, let's take a look at the spiders. And then let's take a look at the Qs. And you can see the spiders, since last Friday, we're now 4 days. And we're not able to gain back or capture back, claw back those losses on the S&P. If you look at the Qs, it's the same thing. You can't gain back those losses. And again, they're struggling. And if you look at the mags, same thing. And if you look at ARK, same thing. The semiconductors are the only ones that are close because, again, we know where all the money's going. The money's going into the semiconductors. Okay, there's no secret there. That's the AI. And remember, when you're looking at the AI sector, you only have a few stocks, right? That you're really that everyone's focusing on, and everyone's trying to buy. And those, of course, are your chip providers and your cloud providers. So, but here's what's interesting. I want to talk about, you ever go to a restaurant, new restaurant, nobody knows about it, and man, you get great food and great service, and when you're done with your meal, you give someone a credit card, bang, you're right back. You don't have to wait a half hour. I mean, some restaurants, it takes longer to get your credit card back than the whole meal. So these small businesses have a lot, these small restaurants have a lot in common with gold. Because when you have that little restaurant, you don't even want to talk to anybody about it because you get, everything's so good. Few people are there. As soon as the word gets out, what happens? That quaint little restaurant with good service begins to suck. They cut portions, you got to beg for a drink, and you got to beg for your credit card like somebody stole it. You give it to them at the end of the meal, and nobody shows up for an hour. And as soon as word gets out about this nice little restaurant, you got to find another one. It's the same thing with any stock or gold, especially gold now. Now, gold, the word's getting out. And we have the FOMO crowd in here. Fear of missing out. Those are called the tourist or the tourist investor, not to be confused with the retail investor. So gold is getting some headlines. Goldman Sachs recently upped its 2026 gold price to $4,900. Bank of America jumped in. It raised its price for 2026 for gold to $5,000 an ounce. Remember, gold cracked our $4,000 level on October 8th. Then it quickly started to scramble to the upside as we started to get the fear of missing out crowd. Now that the banks are in here with forecasts, this is the time that you better start taking profits. This is not the time when you start buying gold stocks. This is when you start taking profits. I'm not saying get out totally, not at all. We've been in the miners. They're up about 92%. We've got a little more than half of those gains. When this year here, when the year started, I said, there's one place we're going to make all our money this year. I said, this is my gang members. It's going to be gold stocks, especially the miners. Go to the miners. Because remember, when gold's popular, someone's got to get it out of the ground. So buy the miners. So gold, like a restaurant, now everybody started talking about gold. You got people that are jumping in that never owned gold. And now they're scared. They want to get in. They want to get in, So that's when you got to worry. So the surge in the gold price is reflecting fear. You see, investors all over the world, especially the big boys, and you take all the banks around the world, they're buying gold up left and right. They're storing gold. Countries are storing gold. Banks, central banks all over the world are storing gold because they look at us as one big bubble. They look at our national debt. They look at our deficits. They look at the interest we're paying on our national debt. And there's no confidence. Our lenders have no confidence anymore. And Trump doesn't even, he doesn't consider anymore, okay, our three lenders are going to end up at the auction today. They'll loan us money. He knows they're not going to loan us money, not at a decent price. So he's buying short-term notes to fund his $10 trillion a year over the next 4 years that he has to pay back. So be careful now with your gold. If you haven't been in, you're late. Now, if you know how to trade properly, you know how to put stops in, but the most important thing, you know how to short. See, this is the thing that is so bad. Wall Street, all the years, have made sure they scared you not to short stocks. And I've been saying to people in the last week, can you imagine you look at your 401k, and with the S&P up 32%, the gold mining stocks up 92%, everything's up big time except the 401k. Why is that? Because remember, you weren't allowed to sell short the stocks in your 401k when the market collapsed between February and March 2025. So that's why when you look at your 401k, you get sick to your stomach. But just think if you could have shorted. So the gains you already had, you would add or double those gains when the market goes down. If you know how to sell short, that is your insurance policy. But Wall Street's done such a terrific job making sure they scared the hell out of you. Don't short, you're going to lose everything. Just like when they tried to scare the hell out of everybody when ETFs first came out. Maybe you recall. But when ETFs first came out, oh my God, they were on CNBC and they're everywhere. Don't get into an ETF. Don't get into an ETF. You're not going to make any money. You know, all that. And now what? Most of the trading is ETFs. So the reason why the gold is going up is the same reason why the yields are going down, the bond market, is because we have increase in unemployment checks. We have a terrible labor market. You know, labor market is everything for our country. We have a weak labor market. We have weak economic growth. And when you listen to this crap, listen to this. This is unbelievable. This is what they're trying to sell you, the jibber jabbers on these financial shows. Listen to this.
So the story out of the banking industry is that credit continues to remain very solid.
Are you nuts? That's insane. I'm not going to waste everybody's time. Everybody knows. Credit? Are you kidding me? We have record delinquencies with credit cards, auto loans, mortgages, business loans. Businesses, 45% increase in bankruptcies. Are you kidding me? We've never seen so many people going into bankruptcy. No. That's a bold-faced lie. Gold's telling you he's lying. See, gold is always the message. It always tells you what's going on. That's why they always try to depress gold. They don't want to see gold go up. Because like the bond market, when you have falling yields, that's bad news. Now, most people don't see it as bad news because when you have a falling yield, think of it as falling interest rates, that helps tech stocks. They love falling interest rates. They love low rates. But overall, when you have falling yields, the dollar also follows the yields. That's terrible. Our dollar's getting crushed. And one of the reasons why gold is going up so much is because the worry about the dollar. The dollar's getting to be worthless. That's one of the reasons why gold keeps going up. So when they tell us how credit is good, no, they're lying. It's not true at all. You know that. I mean, my God. How could credit be good when our economic news gets worse and worse? When our labor market gets worse and worse? Job openings are terrible, terrible. So that's what gold is telling you. So again, because now everyone's talking about it, if you've been in gold early on like we are, or we have been, start taking profits. Don't make a mistake, and sharpen your skills to sell short. Because when this market crashes, or when gold crashes, or oil, if you only knew how to sell short. Now, your 401k, you're not allowed to sell short because the people who are supposed to be on your side, helping you build your 401k, they're working against you. They short you. That's why they don't want you shorting, because if you're shorting, you get the profits. They're shorting you. You get screwed. You're losing your money. Their pockets get full of money. They get tons of money, tons of profit by shorting you. That's why they don't want you to sell short. And what a terrible product. But the fear of the dollar weakening is going to continue to rally gold. I'm not saying get out of it completely. I'm not saying don't invest in it anymore. I'm just saying if you've been in it since we have early on, time now is to start taking more and more profits, especially when they start talking about gold. The banks I'm talking about. That's a big signal. Again, equate it to that little restaurant you found that nobody knew about over there in the corner, and the minute it got popular, you had to start begging for a drink. You couldn't get your credit card back. You think someone stole it. It's been 2 hours you're sitting there waiting for it. Service is horrible. Food's terrible. And that's what's going on with gold. So the wealth is the problem. That's another reason why gold is going up. Our wealth is so screwed up. We have too much wealth with too few people. And the danger of that is that, remember, the very, very wealthy who control all the wealth. Remember, the wealth has increased since that pandemic, the end of the pandemic in 2020. The reason, they increased money supply. 46%. Why? For stock buyback, so the CEOs of the tech companies could keep buying their own stock back to keep pushing the stock price up without having to have profits or earnings. Now let's think about this. The top 10% of Americans hold 93% of the stocks. The top 1% controls 50% of the 93%. But it's a handful of stocks. This is where we're really screwed up. One, gold now, gold stocks, chips, semis, of course. There's a handful of stock that all this money is going to. This is where they're making their wealth. This is where they're creating their wealth. From 2020 low, remember the S&P's up 105%. The Nasdaq's up 240%. Gold, 152%. But get our miners. Our GDX, our miners are up 268%. And your 401k, going all the way back then to where you are now, you're up about maybe about 6%, 6.8%, 7%. Over the past 10 years, the top 1%, their wealth has increased by $42 trillion. What, are you nuts? $42 trillion.
2 minutes.
While the bottom 50% increased by, get this now, you're not hearing this wrong, while the top 1% wealth has increased by $42 trillion through the stock market, the bottom 50% wealth has increased by $335.25. That's right, it's not a joke. That's pretty scary. Because who does all the purchasing? This small group, this 1%. Think how dangerous that is. The top 1%, whose wealth increased by $42 trillion, they're doing the buying. But guess what? They don't need anything. Yeah, they have everything they need.
1 minute.
So when you have this small group making all the money, and most of all the money has come from a handful of stocks, this is very dangerous. But again, if you know how to sell short, it's not dangerous. You stay in there, keep following the money, keep buying like hell, set your stops in, and then identify when you're ready to put your shorts on. In the last 6 months, the top 10% reached a record 113 trillion in wealth in the first 6 months. That represents a gain of 5% from the previous quarter. The top 1%, reached a record wealth of 52 trillion in the first 6 months of this year. That represents a gain of 7% from the previous quarter, not year, from the previous quarter. The bottom 50% reached a wealth gain of just 3.6 trillion. That represents a lousy 2.1% from the previous quarter. Something's wrong. That's why gold's going up. It tells us that. More when we get back. Join my gang, philsgang.com.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. So we're talking about gold. Gold is sending a message, just like the bond market's sending us a message, that there's fear. There's no confidence in the dollar. Gold is in a frenzy now. It's just like the tech frenzy. And what you got coming in now are those tourist investors. Tourist investors are not retail investors. Tourist investors are, by nature, gamblers. They don't want to learn. They're just gamblers. They're looking for that hot deal, that hot tip. So we've had a terrific ride in gold. If you were a gang member, you would have done terrific. But now what we're doing is we're starting to see the banks come out and talking about how they're upping their targets of gold. That's a bad thing for the folks who are in gold now. We're doing great. But it's really bad for the people who are now going to get into gold. This always happens before any bubble pops, any bubble crashes, whether it's a stock or the overall market. At the end, you can see all this tourists coming in. Fear of missing out. And once they start seeing, and these banks are putting this out for a reason, because they want to get their clients out of gold. Listen to what I'm telling you. When you have Morgan Stanley, you have Bank of America, you have all these banks coming up and now saying they're going to raise their targets, they want to get their institutions out of gold before it corrects, before it goes down. They do the same thing with the tech stocks. They did this with the dot-com. They did this with the housing financial crash. Every time before you get a correction or crash, this is what they do, because they know who to work over. The FOMO crowd, fear of missing out, the tourists. So the bottom line, again, is that the money that has been made with gold and these tech stocks have been incredible. And I'm not suggesting you get out and start shorting them. You start shorting them when we get the signal to short. And as I've always said, where it's a stock or where it's a stock market, there's no big surprise. You always get a big heads up. You always know well in advance when you're going to get a big correction or a crash. And one of the signals that's so important is our bond market. When you keep getting these bond yields starting to fall, and then the dollar is falling, it's masked by, oh, the tech stocks are going to go up now because yields are going down. It's true, it does. But unfortunately, it's bad news. Your yields go down when there's bad news. Watch when they do an announcement like that there was an increase in people asking for unemployment checks. You'll see the bond yields go down. So the bottom line, since the pandemic ended, the top 1%, their total wealth has doubled. And all this growth is going to them. It's not being spread out. I mean, think about it. The top 1% has seen their wealth increase by $4 trillion over the past year, an increase of 7%. Their wealth hit a record $52 trillion in the second quarter. So now we got Morgan Stanley. The biggest driver of wealth gains is, of course, money supply. And as long as you keep pushing money in, increasing money supply, printing money, shove it in there, and make sure the CEOs get that money to buy their own shares back, the top 1%, the top 10% who owns, remember, the top 10%, they control 87% of all stocks. So the very, very wealthy, the ultra wealthy, their wealth just goes through the roof. Just through the roof. So the problem is, as I said, they don't spend. They have everything they need. And by the way, when you hear, oh, the wealthy, they put all their money, they're the ones who build all businesses and they build all the manufacturing. No, they don't. Oh, they build them, the wealthy. Of course they do. They build everything. They're wealthy. But they don't use their money. They use other people's money. They just take their money that they get and put it in a pile with the rest of their money. And they keep doing that over and over, keep putting their money in a pile with the rest of the money, and they borrow and use other people's money. So what happens with all this money when they don't need anything? So listen to this. This is amazing.
First of all, the fundamental story is very good. There's a broader narrative, which is we think earnings per share are going to be 13% higher next year. We are raising estimates for most of the banks. Just the revenue side is good, the expense side is good, and the pipeline talk is good.
None of that's true. It's just not true. The banks are in trouble. Remember, they're not reporting $340 billion in losses. They don't have to. It's the law. They don't have to. Banks don't have to report their losses. So if they have losses in stocks, losses in bonds, they don't have to report them. Only if they sell them, they have to report them. So, so these banks are in trouble. People don't want to believe it, but they are. They're in trouble because of all the delinquencies. And he's saying the other cut, remember, he said how credit is solid.
So the story out of the banking industry is that credit continues to remain very solid.
Are you kidding me? How could credit be solid when they're struggling? People are struggling. They can't pay their car payment. They can't pay their credit card payments. They're behind on everything. So let's go take a look at the banks for a moment. I told my members when the banks came out the other day and they reported, I said, take a look at Citibank. So when Citibank reported, it took off. It went from, I think it went from a low of about $95, went up to about a high of somewhere around 101. And everybody was talking about, wow, look at these things, look at this, look at Citibank. I said, whoa, 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 no, don't you dare buy it. Get ready to sell it short. It's going to come back down. Because our chart showed a confirmation that it was a short. These are charts that we designed ourselves 25 years ago, and it follows, we want to follow the money. That's all I want to do. I want to follow pricing, the money. 25 years ago, I got frustrated because there's no chart that would do that. Every chart was the same. At the end of the night, it would tell you if it's red, it closed on the low of the day, green closed on the high. That's not what I'm looking for. I want to know if money is going into my stock. Is my pricing going to go up or is my pricing going to come down? And you can, in my Pro 2 color coded chart showed yesterday when everybody was going rah-rah about Citibank and Citibank was rallying, I said, no, get ready to sell it short. Because we had a perfect pattern. Not only a stochastic pattern, but the color-coded pattern. And guess what? This morning, they lost all their gains. They lost all their gains. Exactly what I say would happen. Matter of fact, I told them that it's going to form a head and shoulder pattern, and it did. Now, if you take Citibank and the Citibank drops below $93.66, you better be shorting it. You better not be buying it. See, but nobody wants you to short. They always scare you. There's nothing wrong with shorting. Now, take Goldman Sachs. Goldman Sachs did not have a short on it. It didn't. But the problem with Goldman Sachs is it was breaking a key support. But yet they're telling us how great Goldman Sachs is doing. JP Morgan, same thing. I said, don't buy it because it's setting up for a short. You can see it. It's called a confirmation. I mean, the charts that we built for ourselves showed a confirmation. It was leading to a confirmation of a short. Look what happened today. It gave back all its gains. I told everybody it would. And it had a head and shoulder pattern. Bank of America, BAC, when they reported yesterday, that thing shot up like a rocket. And then you got all these people jumping in yesterday buying Bank of America. Most of the people were buying Bank of America around $52.85. These are the people who are fear of missing out. But guess what? We knew, even though when that stock went from a low on October 14th of $48.53 and shot up to a high of $52.85, it wasn't going to hold. And guess what? It didn't hold, and guess where it is now? $50. $50, that's right, because our chart showed us where the money's going. In other words, if you follow the money and you understand how to do that, then when money is coming out of that stock, no matter what they say, just like what this guy's saying, how great the banks are doing and how great credit is, it's all BS, it's all a lie. Are you kidding? Have you gone to the bank lately? Easy credit? You run a small business? How easy it is to get a line of credit for your small business. What are you, nuts? Everything he's saying is not true. But as traders, I had a laugh yesterday when all of a sudden these bank stocks roared up and tell how great the bank stocks are. And here they are telling us the same thing today. The banks are good. How can the banks be good?
First of all, the fundamental story is very good. There's a broader narrative, which is we think earnings per share are going to be 13% higher next year.
Now, I don't care what earnings per share is going to be, the estimates. I don't buy stocks on earnings per share. You used to. We all used to buy stocks on earning per share. We all bought stocks on the trailing PE ratio, the forward PE ratio, the price of sales, price to books. The big one we used to buy stocks on was free cash flow, profit margins, return on assets, that's all going. Throw it out the window. Ever since they started to cheat in 2008 with the with stock buybacks, once they started the stock buyback, all we have to do is print all this money now, increase the money supply, shove all that money to our banks, then have the banks shove all that money to the CEOs of publicly traded companies, let them buy their own shares. It'll push the stock price up without having to have increased sales. Increased sales. They don't need increased sales to put the price up. They don't need increased profits to put the price up. It goes up anyways because you have less shares. Anytime that a CEO takes shares out of the system, outstanding shares that can't be traded anymore, stock goes up. It used to be a crime. So these bank stocks, take a look at, if you don't believe me, look at BAC today. BAC on October 14th was at $48.53. That thing shot up. Are you kidding me? It shot right up on the earnings to almost 53 bucks. And I said, no, look at it. Look at our chart. It's telling us it's a short. We have a confirmation it's a short. While the stock was going up, we get a confirmation it's a short. So you have all these people jumping in right at the peak. More people were buying this stock around $52.75, $52.85. Now they're sitting there today wondering at $50, what the hell did they do wrong? They bought a stock at $52.70 and now it's at $50. Well, again, if you're following the money instead of the BS, you'd have been fine. But just remember this. The top 1% is making all the money. And all the money is being made from the stock market. And there's only a handful of tech stocks that are driving the market. And what drives those tech stocks is not the AI that we keep hearing about, is the increase in money supply. And gold is telling us that. So if you've been in gold mining stocks like we have for a long time, keep taking profits, don't get out. Just look for the signal to sell short, and you're going to make a hell of a lot more money selling short, especially with all these AI stocks. But for now, this market will not come down as long as they keep increasing the money supply. 30 seconds. That's the sad part about the market. Is the next crash is going to be the worst crash we ever had, because we only have a few stocks that are driving the market, these AI stocks. 10, 9, and when they crack and go down, it's going to be a bloodbath like we never saw before. And everybody's going to walk away and say, oh, the market's no good. The market's wonderful. If you knew how to short it, protect yourself. It's an insurance policy. Join my gang. See you on the charts. Phil's Gang.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's